Welcome to Step 79, Investing in Crowdfunding. Crowdfunding has been another type of investing that has really blown up in the last couple of years. And essentially, crowdfunding is a way for companies, entrepreneurs, and startups to accrue capital and launch a business, launch a new product, or expand and open up a new project or department. Many new platforms on the internet have jumped onto this emerging market and have made crowdfunding available to the wider public. Generally, there are three types of crowdfunding. Peer-to-peer lending, where capital is raised by getting many different loans of small amounts together from many different people. Pre-sales, where people can pre-order a new product or service before it's even produced or developed. Think Kickstarter. And lastly, selling shares and having people invest in your company in return for a small ownership, which, as we covered, is a great way to get dividends and have a say in the company. As these are shares and not a loan, they will not be paid back the original amount of money they invested, nor should investors expect a straightforward way to resell these, as they won't be traded on the public market probably anytime soon. So what are some advantages of investing in crowdfunding? Well, for one, the returns can be much higher than the average returns of the stock market. Secondly, you decide how to invest. There's no compulsory monthly contribution or minimum amount. Many platforms let you invest with $100 or even $50, and you decide how often and how much you want to put into these new projects. You can also be very specific about the types of projects you want to invest in. You can support those you identify with, be those ones that offer new gadgets, have a humanitarian focus, promote wildlife conservation. You invest in what you believe in. Finally, it can be a lot more fun and rewarding to help build something that you believe in. Buying stocks and shares from some big company that already has billions in revenue, it's not the same as giving a new entrepreneur the possibility to realize their dreams with some startup capital. You might even learn something and one day be on the other side of that. However, there are some big disadvantages of crowdfunding as well. First off, you need to inform yourself very well and investigate more than if you were to invest in a big company, because a startup is much more likely to fail and not meet your expectations. So you need to understand their business plan. What is this project like? When do they expect to make a profit? And how likely they are to succeed? As mentioned, there's a higher risk of companies not surviving. If the startup goes bust, you very likely will not see any of your money returned. So with crowdfunding, you run a bigger risk of not seeing your money or not seeing returns, but this is offset by bigger returns on investment as a possibility. Lastly, these projects often have limits on how many investors they can take, and sometimes those fill up very quickly. So unless you're monitoring these platforms very regularly, you'll often miss opportunities you'd otherwise want to participate in. So think about if crowdfunding is right for you, or if you'd rather stick to the traditional blue chip investing of the big stock market companies. It's up to you.